Let's bring in Evercore ISI Senior Managing Director Amit Daryanani. He has a buy rating on the stock, $67 price target. We're knocking on the door there. I'm not sure which is more interesting here, the stats that we got on the AI-related outperformance or the fact that despite that, the revenue still, is a beat, but not a dramatic beat.
Yeah, it's all a sign in the right direction, which is, growth for Cisco, for example, is up double digits in aggregate for the first time in a while, up 11%. And for what it's worth, the core networking business actually went from being down a couple of points in the Jan quarter to being up 7-8% this quarter. So I think you're seeing the underlying mechanics show some acceleration on the traditional enterprise networking business. AI, listen, they actually got to their target of $1 billion a quarter ahead of time. But $1 billion on a $50 billion revenue run rate, it's 2-3% revenues, right? So I think AI will show up, but the message out of this, I feel, is more the traditional enterprise networking recovery continues to hold up rather well for them.
Well, that's good. At the same time, I think about IBM, right, which for a long time people were counting out. It was seen as old tech. It's been on a really nice run so far. I know you've got a price target on that. You guys at Evercore up around 275. Are these comparable in the sense that they're both benefiting from tailwinds that are helping some of the older line names? Is that just true in general, or is this their strategies playing out to the extent where you think this improvement might be really sustainable even beyond these current price targets?
Yeah, I mean, Johnson, IBM has gone from trading at 10, 12 times earnings to 25 times earnings. So we've seen a really good re-rating there as IBM has really moved into a more higher value, higher margin business over time. AI, for example, is a $6 billion book of business for them today, just a much bigger piece, right? I think Cisco is starting the same journey in a comparable manner. What they do have, though, is at this point, a better cyclical tailwind on the networking side. The big focus will be, do we have a campus upgrade product next year, which would kind of extend this into a multi-year cycle? And then AI will layer on. But, the hope on Cisco, or the expectation of Cisco would be it's a 5, 6, 7% mid-single-digit revenue growth story, and AI can add a couple of points to the growth. So it becomes a bit more of an amplifier versus the only part of the thesis that you make.
Is Cisco buying enough? IBM did HashiCorp a while ago, and that sort of gives it not only a DevOps, but a hybrid cloud story that's a bit different. Cisco is well positioned as they should be?
Listen, you could certainly do more acquisitions. I would argue if you're Cisco, maybe on the core AI networking. So if you look at a name like Arista, for example, that's doing 20% revenue growth, plays very well in the hyperscale. Cisco doesn't have that kind of weight in it yet. So I'd say that place, and then on the security software side on observability would make a lot of sense for them to get more aggressive on M&A. And certainly this company is generating a lot of free cash flow. They're digesting Splunk. But I would agree that IBM has a more mature string of pearls M&A strategy almost when it comes to the software deals they do versus Cisco does right now.
Pearls.